Hey guys, welcome back. Today we will have quite interesting topic, and that is what is a short squeeze. I will explain to you in a few sentences what it actually is. I will also give you several examples which we had in last 10 or 15 years, which are worldwide famous examples of short squeeze. And then we will speak about if you can use short squeeze situation in some companies to make some profits for yourself. But as always, I will just quickly show you my portfolio. You can see that it is right now sitting at above $53,000. Unfortunately, chart which is comparing S&P 500 with my portfolio is still not working. But what I have decided is if it won't be repaired until I make next video, I will manually make my own chart which will show you how my portfolio is doing compared to S&P 500 until Interactive Brokers fix this problem. As you can see here, my cash position has lowered a little bit compared to the last video, and that is because I have actually purchased 200 additional shares of Equinox Gold. I like a company and I like management, so that is why right now more than 10% of my portfolio is invested in Equinox Gold. Why it still perhaps, for example, isn't my number one position and why it will never be my number one position is because no matter how good management and the company are, they still depend on a price of a gold, and the price of a gold is out of their reach, and there is nothing basically what we or they can do about it. So that's why I'm scared to make this my number one position, but I really like the company, what they are doing, and I'm quite confident we will do very well on the long run in Equinox Gold. So let's move to today's topic. There have been some very interesting short squeezes lately on the market, so I have decided to make a video about it. But before we move on to examples of short squeezes we've had recently and in last several years, I will just explain to you what short squeeze actually is. So we have to start from short. What shorting a stock actually means. Of course, when you are investing money in some stock, you can decide if you want to go long. That would be, for example, let's say normal buy, when you are earning money when price of a stock goes up, or you can decide to go short, which means that you are earning money when the price of a stock goes down. How does that work? Well, what you are actually doing is that you are borrowing or lending stocks from somebody else. You are immediately selling it on the market, and then once price of a stock goes down, you can, for example, buy those shares at lower price, return them to original owner, and keep the difference for yourself. That's how it works. Of course, you are not doing every single step. It is all automated. Everything is done in one single click, but that is how it's actually done. So what does short squeeze means? It mostly happens at companies whose future is not bright, at companies whose stock price is dropping down, and a lot of people are going short on those stocks. And then squeeze happens when all of a sudden some positive catalyst happens at that company, or simply price of a stock starts going up for no reason, and people that are shorting the stocks suddenly start to have a lot of losses on that position. And then they either decide to close short position, or their brokers starts calling them because of their huge losses. Because when you are going long, you can lose 100% of your investment, right? But when you are going short, there is no limit on how much money you can lose, because stock can go up forever. But when you are, as I have already told you, when you are closing short position, what you have to do is buy stocks in order to be able to return those to original owner. So while price of a stock is going up, a lot of people which are shorting stock and which want to close their short position must actually buy stocks. So they are creating additional demand for those stocks, and then they are pushing stock price additionally, and we can say artificially higher and higher. And the more stock goes higher, it attracts more buyers. The more buyers come, the price goes higher, and the more shorts want to close their position, and then the more shorts have to buy more stocks, right? It's perfect storm for creating several different demand channels for particular stocks. That is when shorts are getting squeezed. I will now show you three most interesting shorts that I'm aware of, which happened in the last 15 years or so. And perhaps the third one is most interesting because it's the most recent one. But here you can see Volkswagen. It's one of the biggest car producers in the world. Volkswagen is producing approximately 10 million cars annually. And you can see here that during the 2008, there was fight between, if I recall correctly, Volkswagen wanting to buy Porsche and Porsche wanting to buy Volkswagen. They had a lot of issues, balance sheet issues, they weren't profitable, they were losing their market share, etc., etc. But Volkswagen was still a lot bigger car producer than Porsche. There was a lot of short interest in Volkswagen, There were a lot of things happening under the hood of this stock, but you can see here that during one single day, stock went up for several hundred percentage points, and during that day Volkswagen at one point was the most valuable company in the world. Imagine going short Volkswagen and all of a sudden you lose 5, 6 or 10 times your investment. Your broker calling you and telling you that you have to cover that position immediately. That's what actually happened during that day. Second, perhaps good, some people will be mad at me for saying Tesla had short squeeze, but it's not secret that Tesla had huge short position in it, because a lot of people are saying that Tesla is not worth 10% current market cap, and Tesla always has big percentage of its stocks shorted. And you can see here how the chart looks like. Shorts were being squeezed big time here. If you check this small mountain at the beginning of 2020, this is when Elon Musk actually tweeted that Tesla is overvalued. Tesla stock is very expensive at these valuations, and to actually get there at the levels on which Elon Musk thought that Tesla is overvalued, current price of a Tesla stock has to drop by approximately 85%. So Tesla should drop 85% to get to the level at which Elon Musk said that price of a Tesla is too high. So this is another example, and perhaps the best example right now is this GameStop company, and that short squeeze is happening right now as we speak. I will soon show you a chart and you will understand what I'm speaking about. You can see here that for example GameStop short sellers have lost $5 billion this year as Reddit's day trader army squeezed their bearish bet. Reddit's day trader army actually squeezed huge hedge fund managers and took billions and billions of dollars from them. Just unbelievable story. That is actually why I am not shorting stocks, and I will never short any stocks, because price of a stock can stay irrational more than you can stay solvent. I really love that saying. But what you can see here is that this article actually went live yesterday. Here you can see today's article. Melvin Capital hedge fund targeted by Reddit board closes out of GameStop short position. So another hedge fund capitulated and decided game over. They lost several $1 billion of cash. And remember, all of that happened yesterday. Right now, GameStop in pre-market is up 66%. Just look at this chart. At the beginning of this year, they were trading at approximately $10. And right now, they are at more than $200. This is one of the most extreme short squeezes that I have ever witnessed and that I have ever seen. While I was making this video, GameStop actually at one point was, I think, at $350. $350, and they have still unbelievable amount of stocks which are shorted. So battle between people that are long and short still continues, and fluctuations, volume, price change in GameStop Corp is just unbelievable. I enjoy watching it. Of course, I'm not participating in this. This is too volatile for my taste. You perhaps could have expected that I will say that, but this is extremely interesting thing to simply watch and enjoy this battle. GameStop Corp is actually a dying company. Their balance sheet is bad. Their business model is bad. They're losing market share. I think last year they were trading between $3 and $4. And consequently, since price of their stock was going down and down, they attracted a lot of shorts. But then, as I have said, all of a sudden, Reddit army started buying and pushing price of this stock up. They had forced a lot of shorts to cover their positions, actually to buy shares that they have shorting and that have created additional demand, pushed price of a stock even higher, then that attracted more buyers, etc. You know the story. So yeah, it will be really interesting to see how high this stock can go. But the last point is, can you somehow profit from this? Not easy question to answer. As you can see from these charts, short squeeze is one of the most powerful short-term market catalyst and can generate huge volatility in stock prices, upside or downside. It can happen really quickly. That's how it usually happens. And price of a stock can move dramatically, not on daily, not even on hourly basis, but in terms of minutes. And you can have huge losses or gains, of course. You have to bear that in mind and to be extremely cautious if you want to enter this game. If, for example, I would like to take advantage of this situation, I would probably buy put options, because I don't think long-term price of this company is sustainable at these levels, because again, their business is deteriorating and it's becoming worse and worse every single month, and I would not short at any cost. But again, if you do have a stomach for this kind of volatility, and if you know that price of this company shouldn't be at these levels. You could try with small percentage points of your portfolio to short, for example, stories like this one. You have seen, for example, Volkswagen chart. They went up for 400% one day, and then they have dropped 70% the next day. For example, that is perfect scenario if you want to short some company when it's going up so high, and when you know on the long run it can stay on those elevated levels. What you also could do, of course, is try to buy the stock and try to capture few percentage points of gains on the upside if this trend continues. But again, it's really more speculation than investing. As you can see, there is a lot of volatility here, and it's really dangerous game, and I would avoid touching it. But again, if I had to take advantage of this situation, I would buy long-term put options, because in most of the cases, value of a company isn't moving higher with price of a stock, and at the long run, price of company and value of a company tends to align well.